Hey, hi everyone. Hi. Hi Bildad. Hi Ursh. Hi Fabio. Hi Jack. Hi Jonathan. Ralph. Robin. Serge. Rojian. Stacy. Vicente. Hi everyone. I'm gonna start the webinar in 2 to 3 minutes. Let's just wait for everyone else to join. I see a lot of people still joining. In the meantime, can you guys let me know if you can see my screen and if you can hear me clearly? My screen says IC Market Webinar 7 Common Mistakes New Traders Make. Okay, cool. Everyone can see my screen, right? Hi Jack. Hi, I'm just gonna call you Leon because I cannot really pronounce your first name. Hi Simon. Good morning. Good morning. Where are you from? How come it's morning for you? It is evening here in Singapore. Hi BL. Hi Robin. Oh, you're from the UK. Okay, since we're still waiting for everyone to join, can you guys let me know where you guys are from? So I know. Hi Bob. Hi Albert. From Philippines, from the UK, from Australia, from Germany. Nobody from Singapore. Okay, so I've lived in the Philippines, I've lived in Australia, I've lived in the UK. Where else are you guys from? Okay, Netherlands. I've never been to Netherlands. Kenya, India. Okay, we have an international crowd today. Okay, I do see the attendance list still moving, so I'm gonna start with the introduction first. So by the time I'm done with the introduction, I think everyone will have joined and settled in, and then we can start with today's topic. So hi again, everyone. Welcome to today's webinar brought to you by IC Markets. The whole point of this webinar is to help you guys grow in your trading and help you improve as a trader and grow your trading account. So our topic for today is 7 common mistakes new traders make. And we're going to go through some of the common mistakes, the 7 common mistakes. I really like this topic because this topic is about trading psychology. So trading psychology is super important in trading because if you don't get your mindset right, you're not going to make money in trading. Okay, it's the same in anything. It doesn't have to be trading. It can be like in investing, it can be trading, it can be doing business. Your mindset needs to be in the right place for you to be able to succeed. Okay, I still see a lot of you joining, so we'll just wait for everyone else to join. Okay, before we start, disclaimer. I just want to remind you guys that this webinar should only be construed as educational and should not be taken as investment advice, trading advice, or any kind of financial advice. Okay, this is not a signals group. This is not a forecasting group. This is an educational webinar. Okay, again, hi Eric. This is an educational webinar to help you guys grow in your trading. Okay, our agenda for today would be 7 mistakes a new trader makes. So the 7 mistakes we're going to be talking about is number 1, not having a trading plan. Number 2, not using a stop loss. Number 3, no risk management. Number 4, chasing losses, also known as revenge trading. Happens when you let your emotions cloud your judgment, and even more so when you don't have a trading plan. Number 5, overtrading. I think a lot of us are guilty of this. You got to trade to make money, not to trade for the sake of trading. Number 6, ignoring fundamentals. And number 7, not keeping a trading plan. Hi Bob. Hi. I love how a lot of you still remember me as Bob. Okay, cool. I think that's about everyone joining for today. I'm just going to start with the webinar. Okay, I'm going to do an introduction of myself for those who don't already know me. Can you guys let me know? Whoever is here for the first time, let me know in the chat box, because if you're here for the first time, then you wouldn't know who I am. If you, the rest of you, BL, Calvin, Steve, Steven, I'm sure you guys are all regulars. That Choi, who here is, hi, oh, hi best friend, hi, hi Tuan. Okay, anyone here for the first time? Okay, I'll take that as a no, and I take that you guys already know who I am. Hi Frank, hi. Okay, cool. For those who don't already know me, I guess majority of you should already know me. Frank is here for the first time. Hi Desiree, welcome. Okay, my name is Cassandra. You guys can call me Cass. Some of you are referring to me as Bob because at one point there was 2 Cassandras in the company, and to make everyone's life easier, I just thought it would be easier if people just call me Bob so we don't get confused. Okay, so a little bit about myself. I am an investment analyst and a prop trader at Everest Fortune Group. So Everest Fortune Group is an award-winning research firm. We are the best, we're the finalists for best equity and forex research for 2019, 2020, and 2021. 2022 is not out yet, but basically what we do at Everest is we do a lot of research and back testing. So what we do with the information of the research and back testing is to forecast where we think the markets are going, and then with this information we advise banks, brokerages, hedge funds, mostly us old timers. Yeah. Hi Desiree. Hi. Okay, we advise hedge funds, financial institutions, and you guys here in this webinars where we think the market is going. But again, although we advise you guys where the markets are going, it does not mean this is a signals group or a forecasting group. Okay, this is still not a signals or forecasting group. Please take this webinar as educational only. Okay, a little bit about myself. I've been trading for a few years now. I am a prop trader, and I have been prop trading for Everest and a few prop firms. Okay, so for those who don't know how these prop firms work, you first need to take a test, a couple of tests actually. To pass this test, you need to do 8 to 10%. I'm sure you guys are tired of listening to this already. 8 to 10% a month without a drawdown of 5%. Okay, so a month, 30 days only has 22 trading days, by the way, because the weekends are not counted. So I did that by, of course, using technical analysis. So I do specialize in technical analysis. If you guys have any questions regarding technical analysis, please ask me now and in the next few webinars, because I've only got 2 to 3 more months left with you guys, and then I'm going to go become a full-time mom for a first time. Okay, so if you guys have any questions that I can possibly help you with in terms of technical analysis, this is the best time to ask me, because after 2 to 3 months, a new presenter will be doing this webinar for you guys. Actually, maybe Des, it'll just probably be Des, right? Or I don't know who he's replacing me with, but that person that is replacing me may not be a technical analysis specialist. Okay, so that person might do fundamentals instead. So if you have any technical analysis questions you want to ask me, please ask in the next 2 to 3 months. Okay, because this is where I can better assist you guys in growing your trading and your account. Okay, so that's that. I'm going to continue. Okay, so we're going to start with today's webinar, which is the 7 mistakes that traders make. So the first mistake, I'm sure all of us have this mistake, is to not have a trading plan. Actually, so today's webinar is a lot about trading psychology and about mindset. So I would love if you guys would interact with me today, because I want to know, like, where are you guys at with trading? when it comes to trading, I think trading psychology is the first and the most important thing, and then risk to reward, and only lastly do you focus on technical analysis. Why? Because let's face it, let's be honest, okay? Technical analysis, we've all done it together before, right? We've all drawn that support resistance, we've all done the trend line, the channel, the Fibonacci, the whatnot. If we're being very honest, I would say a 7-year-old kid, maybe an 8-year-old kid with enough practice and training is able to, I mean, if children are allowed, like, are so capable, they can even learn piano. Like my sister was 4th grade in piano when she was 8. Okay, if children are so capable, I'm very sure if I taught a child technical analysis, the child will be able to understand it and comprehend it and master technical analysis. That's why when I put my priority on where I think is the most important for trading, number one is trading psychology, because a child can do technical analysis, but a child may not be disciplined enough to be able to carry out some rules that they set for themselves. Okay, like the same why children is having a hard time like doing their homework, and like they still eat candy and they still need to be told off all the time. That's why the parents are there and an adult is there. But us being adults ourselves, we don't have someone who's like, hey, don't do this, don't do that. Okay, that's why trading psychology is so important, because you first need to prioritize your own discipline and your own trading psychology before you can be profitable in trading. Okay, so not having a trading plan. I am very sure at least 50% of you here do not have a trading plan. Can you guys let me know in the chat box who of you who has a trading plan and who does not? And then I'll tell you guys my trading plan. Okay, Fabio has one. Oh, hi Fabio. Fabio is a regular. Actually, most of you are replying are regulars. Frank said everyone has a different plan. Trading plan is in my head. I have a trading plan, but it's not follow. My fault for jumping into trades. Exactly. So the problem is not even not having a trading plan. The problem is not being able to follow through. So it's the same as like anything we do in life. Honestly, if you come up for a plan, there's this one thing that my husband always says to me. 99% of people always have an idea, or like they always have an idea, or like they always have this amazing plan of how they're going to make it and be successful, but only like 1% of people make it, because these are the 1% of people who actually execute and follow the plan. So number one is to have a plan, and then number two is to actually follow your plan until you succeed. I have one, but not very fulfilling. Impulsive, trade, or gambler minds. Okay, cool. Okay, so before you even make a plan from trading, you first need to ask yourself, what is it you want from trading? Like, do you want to be a full-time trader? Is this just a side hustle? Is this just a part-time thing? Is this just like something? You first need to decide what is trading to you. Like, how many of you, like in 5 years, see yourself being a full-time trader? Anyone? Okay, I do know, not for just a side hustle, just a part-time thing. Okay, so a majority of your answers here I would be the same as mine. I myself, who like I specialize in technical analysis, I do prop trading, I'm an investment analyst and whatnot. I hope to become one next year. I personally don't even see myself being a full-time trader in 5 years. Why? Because I feel like there's so much that life can offer you, and I feel like trading is just one way, right? It's just one vehicle that can help you. So I think me personally, I would love trading to complement my life, but I don't want my life to revolve around trading. So therefore, I myself, even today, I'm not a full-time trader. I would say I'm a part-time trader. I think a lot of you know that I only spend about 1 hour a day on the charts. I don't spend anything more than that. At this current point of time, I spend more of my time helping my husband with his businesses, but currently trading is definitely not my full-time job, and I do not ever see trading being my full-time job ever. So you need to first decide, like, give yourself a timeline for example 2 years, 2 years or 3 years. What do you want from trading? So there's a few answers to this. Number one, you want to be a full-time trader. No, it's totally fine if you want to be a full-time trader. You don't have to follow my path. My path is that I only want to make like side income, or I want trading to complement my life rather than trading being my main thing. Okay, so that's me. But you yourself need to ask yourself, like, what is it you want from trading? So is it like you want to be a full-time trader, or you want the same as me, you just want it to like complement your life, or you want it to... Hi Joash, welcome to our webinar. Hi, sorry, I still see a lot of you joining. Hi Grace. Right, okay, so first answer that, and then you will be able to come up with your trading plan. Okay, so my trading plan, okay, I'll share with you guys my trading plan, and then you can kind of see if you can tweak it around that, or you can see if it's similar to yours. So my trading plan is simple. My trading plan, as you guys know, I am a prop trader. My trading plan is to be funded $1 million. I've told you guys this many times already. Okay, from prop trading firms. Okay, that is my trading plan. The only way to get funded in this way is that I have to take the prop trading test and pass this test. As you guys know, I've mentioned in many of my webinars, these tests are not easy to pass. Only less than 2% of traders ever pass this trade. On a monthly basis, I think they have 4,000 or 5,000 people taking this test, and only 1 to 2% of people, actually it's less than 2% of people ever pass this test. Okay, each time you take this test, the most they give you is like 300,000. I only do 100,000. So I need to take this test 10 times and pass 10 times before I can get $1 million in funding. That is my trading plan. So I have worked my strategy and my plan around getting this $1 million. So how did I do that? My plan was, number one, to strengthen my trading psychology, come up with a risk to reward plan, and then come up with a strategy that I use through technical analysis. Okay, so my trading plan is, number one, my risk to reward should always be at least 1 to 2.5. Sometimes actually it was 1 to 2, but every time it's 1 to 2, I just feel like it's not even that exciting. So 1 to 2.5 means that if I have $100,000 account, right? If I have $100,000 account, I'm only risking 1%, which is $1,000, to make 2.5%, which is $2,500. Okay, as my account grows, then the numbers will change, but the percentage will never change. So my trading plan is that every time I take a trade, it has to be 1 to 2.5 on a minimal. Okay, it can be way more than that, but nothing less than 1 to 2.5. Why? I will never ever take a one-to-one trade. A one-to-one trade, a one-to-one payout trade is like going to the casino and playing blackjack. Because you put $50, if you win the casino, you get $50 back. That does not make sense to me. Because if you lose 5 times out of 10 trades, you win 5 times, and you lose 5 times, you just break even. So out of 10 trades, so much effort is put in, but you only break even. Okay, so rather, for me, the trade has to be 1 to 2.5. Okay, the second thing that is in my trading plan is that I only take trades that I am 80 or 90% confident. Okay, I'm 80 or 90% confident. How do I become confident in the trade? Is when I use technical analysis, everything is lining up. The more things lining up, the more things telling me it's a buy, the more things telling me to get in for a buy, this is exactly where the buy is going to happen, the more confident I become. And if I see there's no diversions or anything, then I become even more confident. So everything has to align for me to get into the trade. Okay, that's my second plan. My third plan is that when I take a trade, sorry, I wrote this down. I can't read my own handwriting. Okay, when I take a trade, it has to be high probability, and I will try to take at least one trade a day. Okay, I try to take. Please also give us a view about algo trading. Okay, I will give you my view. I'll give you my own personal experience on algo trading. Okay, I will take one trade a day at least. Okay, at least one trade a day. If I cannot find a 80 to 90% probability trade, I do not trade at all. Okay, I do not trade at all. Okay, so my trading plan, let's start from the beginning, is number one, to get $1 million in funding, which I'm on my way there. I'm almost there actually. If you are more confident with the trade, do you increase the lot size? Nope. Okay, I know I've done webinars for you guys where I say 1 to 3% is okay. So I mean, ideally 1 to 3% is okay. But I have come to a point where I've become so disciplined that I'm like 1% or don't take the trade. You want to do 2%, don't take the trade. You want to do 1.5%, don't take the trade. If you want to be greedy, don't take the trade. So I personally 1%, that because there's so many times that I was greedy and I took like more than 1%. I took like a 2% trade or 3% trade and I end up losing it. And then I'm just like, after the trade is over, I just sit there thinking like, oh my god, if only I had taken the 1% trade, then now I wouldn't be in like 3% loss. I wouldn't be in 2% loss or whatever it is. So like, to standardize and to not like burn yourself in the process of wanting to make money from trading, you should just stick with one. So my rule is 1%. There's even times where I chicken out and I do 0.5%. But like, I never, well, I try not to. There are times I still get greedy. Okay, I try to stick to 1%. Okay, but recently my mind has been very, very strong. I'm just like 1% or stay out. I agree, don't get greedy. Exactly. Okay, so back to Tiwari's question. What's my view on algo trading? Okay, this is my own personal experience. Okay, literally my own personal experience. I have placed funds. This was before I started trading my own funds, and this is when I just started trading. I had like people come up to me and say that the algo trading was like making like 8% a month or like 10% a month or whatever it is. And I remember putting a lot of funds with them, and then their algo was actually working for like 1-2 months, so it was really performing and doing really well. On the third month, it stopped performing and the account went to zero. So the thing about algo trading is that it can work. I believe algo trading, it can work somewhere in the world. Someone is using algo trading and it's been working for years, but I believe that's a team of people. I think that's a group of people. So when I put my algo trading into this guy's algo, which he himself created and like coded, I felt like maybe one person was not enough to understand the entire market conditions, because it was working for 1 month, it was working for 2 months, and then on the third month, it just lost everything because that guy wasn't tweaking his algorithm and wasn't tweaking his code based on the market conditions. So therefore, to be safe, I'm sure there's profitable algo trading out there, but I'm sure it's only like 10%. If you manage to find the 10%, that's great. But if not, chances are you're not going to find that 10% of people who are making money in algo trading. It's best to just stay out of it and be safe. I've experienced it before. Best friend, I think there's a lot of people experience this. Okay, how did you manage to change your psychology knowing that the rules of being able to make the discipline change? Was there anything that made you do it? If you lose enough money in trading, you're going to change your psychology. I got played out too. Like, if you lose enough, you'll eventually be like, okay, enough is enough. It's time to make some changes. So I came to a point in trading where I'm just like, I'm so tired of losing. Like, what am I not doing correctly? That's when I started reading a lot of trading psychology books. I reading a lot of books, like watching a lot of YouTube videos, and then my trading just like improved tremendously because my mindset changed. Okay, so back then I didn't even bother about trading psychology. My first aim was actually technical analysis, which is wrong. You should do trading psychology first. risk management, then only technical analysis. As in, like, you should learn all three. You should learn all three, but just that when I have to prioritize these three, the first thing I prioritize is actually trading psychology. You know, trading psychology is knowing when to take a loss, when it's time to take a loss. Okay, so that's that. Is leverage at 1 to 1,000 risky? Yes. Leverage at anything, leverage is always risky. So if you win a lot, but you lose a lot as well. So leverage can burn anyone, even if you're a very experienced trader. So my advice to you is only use leverage if you are very, very confident with your capability. If not, just stick to one-to-one. The lower the risk, the better. The more I started to trade, the more I realized how important risk is. Okay, we'll go into risk in a bit. Then you guys can understand. Actually, I'll just explain to you a bit about risk. So it's not just in trading, it's the same in business, it's the same in property investment, it's the same in anything you do in life. Risk is very important. So let's say you are doing retail, for example. Let's say you want to sell a bag. You sell the bag for $100 and your cost price is $50, right? So your risk is $50. If you don't sell the bag, if the bag spoils, if the bag, something happens to the bag and it damages, you lose $50. But if you manage to successfully sell the bag at $100, you make $50, right? Because your cost is 50. So it's a one-to-one risk to reward. So if you think of that in terms of trading and in anything in life, you understand how important risk is. And that's why your entry in trading is also so important, because your entry in trading is like the cost of the bag. Like if you get in a good entry, it's like buying the cost of the bag at like $20 rather than getting the bag at $50. Okay, cool. Okay, I've left this book here, Trading in the Zone. I'm gonna recommend a few books that you guys can read that is really, really good for your trading psychology. The first one is Trading in the Zone. Yeah, I think this one is okay, but the one that really changed me for the better, I think, is Reminiscence of a Stock Operator. I read that and I'm just like, oh, okay, I don't have any excuse to not succeed anymore. Because if you read Reminiscence of a Stock Operator, you will listen to like Jesse Livermore's biography, or how he made it in trading, and he made 100 million in like 1930s. Okay, and back then it's not like today. Okay, today we have brokers that are from your phone. You can trade from your phone, you can book pending orders and whatnot. But back then, if you want to make a trade, you need to call someone. I think you call your broker and say, hey, get me into gold at this price. And then once the trade is like reaching your take profit, you have to call the broker again, hey, get me out of the trade at this price. And then you need like a piece of paper. I mean, this is what I understood from the book. Okay, you need a piece of slip or piece of receipt to confirm your order. So we are super lucky that we have technology nowadays. Like resources is readily available to us, so there is no excuse why we cannot make it in this field, because we have so many resources. Like we have so many platforms. Like you guys have these free webinars to attend. Back then when I just started trading, I didn't even know there were free webinars. I paid like few $1,000s to attend courses to learn trading. Okay, so you guys get it like super lucky. I mean, like, not you guys, like all of us get it super lucky nowadays that resources is like so readily available right now. So there's really no excuse to not succeed in this field, or in anything in life for that matter. Okay, so that's one thing you should stick with yourself. Okay, I'm gonna move on. So the next mistake that people usually do in trading is not using a stop loss. Okay, I'll just give you an example. I'm sure we're all humans here. I'm sure we've all been to like secondary school or like high school, or like we've been through that period where we all were teenagers. Okay, I'm sure we all had like people we've met in our life who were like red flags, but we didn't like cut them off. Okay, so I think the easiest, now that I'm going to be a mother, is what advice would I give myself is the same advice I would give my child. Okay, so using a stop loss, I think. Please give me your view on. Sometimes I remove my stop loss during the trade. Okay. Okay. So removing your stop loss during a trade is like jumping into the ocean. Okay. jumping into the ocean, and for some reason you decided to take your life jacket off. Okay, you're just like, oh, I want to like live my best life. You take off your life jacket. So your stop loss is there as an insurance to like protect you. It's super, super, super important to use your stop loss. So I used to be one of those people who also remove my stop loss. When I see price hitting my stop loss, I remove my stop loss, or I take my stop loss and I move it down. I give it more breathing space. Okay, so I used to be one of those people who cannot take losses. Okay, but I need to tell you this, it is super important. If you cannot take a loss, right, you cannot make it in trading. Okay, because in trading there is no 100% win. Trading is not like an exam, you know, like in an exam, like if you study really hard you can get 100%, right? But like trading, there's no 100% in trading. Until today, I've never met anyone who has a 100% track record on trading, because it's not possible. Even Warren Buffett, which is like one of the richest men in the world, doesn't even have a 100% track record for like investment or anything, because it is impossible. We are all humans, we're all going to make mistakes, right? So therefore, when we do make those mistakes, we need the stop loss there to help us get out of the trade if we have a mistake. Okay, this is very important, that you don't have the God complex. It's called the God complex mentality. Des used to say it to us all the time. Don't have the God complex mentality where you think you're always correct. Okay, because sometimes you are going to be wrong. So when you are wrong, your stop loss will be there to protect you. Okay, the other harm that you are doing to yourself and to your account if you move your stop loss and if you don't move your stop loss will be that your account can be at risk and you could lose everything in your account. That's the worst case scenario. You lose everything in your account. The second part is that you lose more than you intend to. So imagine I set a stop loss for 1%, but if I were to move my stop loss down, or I were to remove my stop loss, my 1% plan will not go to plan anymore. Therefore, then the whole point of me creating a plan and not following the plan will just make me take a step back from being successful in trading, right? So the whole point is make a plan, stick with the plan. If you have a stop loss, if it's gonna hit your stop loss, let it hit your stop loss. Don't worry about it. If it hits your stop loss, let it hit your stop loss. So if, let's say I were to teach a child, my child, for example, I'm gonna be a mother, right? I'm gonna be a mother, and then if I see my child's trading and my child's not using a stop loss, it's gonna be so easy for me to be like, hey, why aren't you using a stop loss? You know you're gonna like burn your account, right, if you don't use a stop loss. But the problem with trading is, because trading psychology is so important, it is your own ability to be able to tell yourself to use a stop loss and to stick with a stop loss. That's why trading psychology is so important. This is like the number one thing in trading. I think that literally is a quote somewhere saying that trading has very little to do with intelligence and everything to do with emotional intelligence. Emotional intelligence meaning your ability to follow your own plan, your ability to be disciplined, your ability to do what you have to do when it's time to do it. Okay, so that's that. So Rajesh Kumar is asking, what's your view on forex, metal, and share trading? Okay, I personally only trade XAU USD. I know it's ridiculous. There's so many pairs out there, and it's funny that one trader only trades one trade. I trade XAU USD. Why? Alone only. Why? Because XAU USD alone, this one pair alone has given me so much profits already that I don't see the point in going to look at others. So the only time I look at Forex or anything else other than XAU-USD is when XAU-USD is consolidating. I really do not see a trade entry. Like no matter how I analyze, I just don't see any trade entry. Then that's when I'm just like, okay, I haven't taken a trade in a long time. I think I should consider looking at other pairs. That's the only time I look at other pairs. But other than that, I am all for XAU USD. Ethereum, I look at it fairly often because, as you guys know, I told you guys that I don't trade Ethereum, but 70% of my portfolio is in Ethereum, where we buy and hold Ethereum. Okay, so I go and look to see if my analysis is still valid, but otherwise Ethereum, I plan to hold it for years and years and years until it becomes $6,000, okay, or $10,000 or wherever it is going. Why Ethereum and not Bitcoin? Why Ethereum and not Bitcoin? That is a good question. Okay, it can be one or the other. It's just that I think I already started charting on Ethereum, so I just stuck with Ethereum because since I already started charting on it, and my analysis for Ethereum seems to be quite accurate, seems to be working quite well. That's why I just stuck to Ethereum. Okay, so I never bothered to look at Bitcoin because Ethereum was working so well for me. So every time I have extra funds in the past, I will just throw all my extra funds into buying more Ethereum. So my Ethereum portfolio just kept growing and growing and growing and growing. And I hope to have more funds, then I can continue to buy more Ethereum. Okay, but that is my own personal plan. Okay, this is my plan and my trading journey. I don't expect everyone to follow my plan and my trading journey. You need to have your own plan and your own trading journey and what you want from trading. So me personally, what I want from trading is that I want Ethereum price to go up because I have so much in Ethereum. And number two, on a daily basis, I just trade my prop trading and I just trade gold on a daily basis. If really nothing on gold, then I am forced to trade Forex and I trade Forex. Okay, so that's that. Please use a stop loss. Please use a stop loss. Oh, okay, one more story I want to tell you guys that is super important regarding stop loss. I have a friend. Okay, no, I know two traders actually. These two traders, one is $1 million trader, okay? So one has made millions from trading. Okay, but he does not use a stop loss, which I think is crazy. I think it's crazy that he doesn't use a stop loss. So he tells me his reasoning is that I don't need to use a stop loss because I'm constantly looking at the charts and I can just manually get in and out. How do you handle gold volatility? Will you get stopped out easily? I don't trade during news events, so I actually don't find gold very volatile. Usually if I get in my trade, it takes a few hours to get to my stop loss or my take profit, because also I'm looking at the 4 hours time frame. Okay, so this guy, he doesn't use a stop loss, and his reasoning to me is that, oh, I'm always sitting in front of the screen, so I don't need to use a stop loss because I'll just manually get out of the trade if I'm losing. Okay, number one, you need a lot of discipline to do that, because if you see you're losing, are you really going to get out of the trade? If let's say you are losing, let's say, oh, that guy handles millions of dollars, by the way. Okay, let's say you see you're losing few $1 million. Are you really going to take the loss and take the few $1 million loss, or is it easier for you to let a computer kick you out of the trade? How long do you hold trades? My trades usually last for a day to 2 days. The maximum is 2 days, but usually it's about okay, so if I get in today, usually when I oh, there's one more thing I need to tell you guys, but that's later. Okay, so my trading style is that today I put my pending order, my stop loss, my take profit. The next time I come back and review my trade is tomorrow, 24 hours later. Okay, 24 hours later. Oh, so Desiree is saying XAUUSD burns me. That's the thing. If you find that something burns you, you need to go and find something that doesn't burn you. So why I don't trading Forex is because Forex burned me a lot. Okay, so maybe my strategy doesn't work very well on Forex, or maybe Forex is very fundamental analysis and news affects Forex a lot. But I have been burned by Forex before, so I do have like a bit of like anxiety when I trade Forex. Okay, but XAUUSD, I've seen a lot of results. That's why I always stick to XAUUSD. So if you find a pair is always burning you, that means there's only two things. That means that your strategy is not working for that pair. Okay, so number one, the first thing you can do is change your strategy to work for that pair. Okay, you can tweak your strategy. The market is not going to change for you. You need to change for the market. Okay, so if whatever you're doing, XAUUSD is not working, you need to change your strategy. That's the first option. Number two, don't trade that pair. move on to a different pair that where your strategy works. Okay, so I didn't change my strategy. I changed the pair and I found a pair that works on my strategy. So that's how I'm so attached to Excel. So the second thing is, so this guy, okay, so guy, he said he would manually do it. Okay, one with this is that, so one time I went on holiday, I was doing this webinar somewhere, and you know what happened? My Wi-Fi actually went off and the electricity in that country actually went off. So I wasn't doing the webinars with you guys. I was doing a webinar for something else, okay? And just halfway through my webinar, the electricity went off, the Wi-Fi went off. Imagine if you are on a trade and you did not put a stop loss, and your Wi-Fi and your electricity for some reason, I mean, like, because all of us are from like around the world, right? So what if for some reason your electricity just goes off, or your Wi-Fi just goes off, your 3G just goes off, and there's no way for you to access your trade that you are on, and you didn't put a stop loss? Worst case scenario, you lose your entire account. Best case scenario is you don't lose. Wi-Fi comes back and it works. Okay, so please, please, please always use a stop loss. People who don't use a stop loss give me anxiety, honestly. Okay, do you mind telling us which platform you use? MT4, MT5, TradingView, and others? I only use MT4 and TradingView. You can use as well. You can use other things as well, but for me, MT4 and TradingView work. For me, it works. Is it bad if I specialize in 4? No, you can specialize in works for you, right? There's no point. There's some sound issue. Can you guys let me know if you guys can hear me, or is it just Desiree? Can everyone hear me, or is it just Desiree? Everyone okay? Off and on, sound issue, yes. You are breaking for me, sound issue, no, keeps going in and out, echoing. Is it okay now? Now okay? Okay, a while ago, my sound check said it was yellow, means it was medium quality. Now it's good, so I'm thinking, I don't know what happened, but I'm hoping it's okay now. Okay, everyone's good now, right? Everyone's good now. Okay, cool. Okay, no risk management. We already went through this. Risk management is super important. I'll just give you some examples of not having risk management. Okay, risk management is super important. Your aim in trading is to do 1 to 2 risk to reward ratio. Please digest this information. Never get into a trade that is less than 1 to 2 risk to reward. Okay, if you are going to do 1 to 1 or anything less than 1, you might as well go to the casino and gamble, because blackjack pays you 1 to 1, right? There's a lot of things that pays you 1 to 1. Why are you doing a 1 to 1? Just do 1 to 2. Okay, give yourself a fighting chance. Your risk reward to be important. It is the same in anything. I was reading this book about property investment. So I'm sure a lot of you have read this book or have heard of this book. It's called Rich Dad Poor Dad, right? And I cannot remember in which chapter it was, but in one of the chapter, Robert Kiyosaki was saying that your win should be at the entry. So then I was thinking to myself, this doesn't just apply to property, because when he said that, it makes to him, right? Your win should be at the entry, because let's say you're buying a property for capital appreciation. Okay, you buy the property for $100,000 and you sell it for $200,000, you make $100,000, right? But if you manage to buy the property at a lower price, for example, at $50,000, and you sell it $200,000, you would have made $150,000. And even best, if you buy the property where it's a rentable area and you rent out the property, then you would have even won more. So your win should be at entry was such a strong message to me, because I was like, oh, this I think this what's it called, analogy, is it called analogy, or this motto in life, this motto should be applied to every aspect of your life, whether you are trading, whether you are buying a property, whether you are doing a business, whether anything to do with investment wise. This is such a good motto to have in the back of your win should be an entry, because mine, hold on guys, I'm my sound check just went become medium. Hello, can you guys hear me? Okay, I had to turn off my camera because I got a notification that says that my sound audio is, you may be experiencing degraded audio quality in your recording. Please close any unused internet applications. I don't have any unused internet applications. Can you guys give me 1 minute? Let me go and I don't know, maybe I have things running in the background. Just give me a sec to turn off. I don't know why my internet's not stable. Okay, I'm turning off Spotify. I'm turning off my PowerPoint, which doesn't even use internet. Oh wait, I can't turn off my PowerPoint because I need it to do the slides with you guys. I don't have anything else running in the background, so I don't know why the internet is being like this. Okay, it's okay. Cancel. Okay, cool. I'm just gonna turn off my webcam, okay, so that the internet can be used on the audio instead of my face. You guys don't really need to see my face anyways. Okay, cool. Everyone can hear me, right? Is the audio better now? Okay, thank you, Rajesh Kumar. Thank you, BL. Thank you, Frank. Thank you, best friend. Audio is better now. Thank you, Arun. Because if it's still not better, thanks, Jack. My next option would be to turn off the Wi-Fi and connect it to my phone's hotspot. Okay, but if it's okay now, then I'm just gonna continue on with the Wi-Fi. I don't know why this is happening. This doesn't usually happen, but yeah, see, this is why you should put a stop loss, because sometimes your Wi-Fi is unstable. Better than when, yeah, best friend would know. Okay, so please use risk management, because the win should be at your entry. That means winning at entry, meaning that you should not jump into trades unless it is at the best possible entry. Okay, you should always wait for price to pull back to the best possible entry and then only get in at the best price. Even if price is going up, okay, you know that price is going up and you're like, oh, price is going up, why don't I just get in right now? You can get in right now, but you're not going to feel good if it pulls back and go into a better price. So the best case scenario is just wait for price to pull back to a better price and then you get in. Okay, so that's that. I'm going to move on. Okay, chasing losses, also known as revenge trading, happens when you let your emotions cloud your judgment, even more so when you don't have a trading plan. How many of you have revenge trade? Can you guys let me know in the chat box? I expect at least 50% of you to say you have. If you say you didn't, you are probably lying to me. Me, I do. Yes, of course. I do. Yes. Revenge traded. Okay. I'm glad there's many of you. Still a bad habit, although I have cut down. The fact that you have cut down means that your trading psychology has improved. I have really chased losses until I gave up. Okay, guys, this is exactly why I have to tell you, don't have to like feel bad about yourself, okay? Because even I have revenge trade. I mean, everyone has revenge trade, right? Who here is mentally so strong that they have not revenge trade? Seriously. This is why trading psychology is so important, because you need to be mentally so strong and so like disciplined to not revenge trade. So even I myself, I've revenge trade so many times in my trading career. Okay, so I know I have this problem. Okay, I'll give you guys an example. This is probably a very bad example. If you know you have a drinking problem, okay, you every time you see alcohol, you're gonna drink alcohol. What is the solution to it? Number one, you try to change your mindset as much as you can. You meditate, you like strengthen your psychology, your mental, blah blah blah. Then next time you see alcohol, you will be so strong that you can say no or you'll walk away. Okay, that is your first option. Number two option, if you are mentally not strong enough and you can't do that, I think the best option is to remove the sight of alcohol from yourself. So don't walk past a bar, don't buy alcohol and put it in your fridge, like don't hang out with people who drinks a lot, you know, like in because you know you are not strong enough to like say no, right? So that's why I personally, I know if I keep staring at the charts, I know if I keep staring at my trades, I know if I lose and I dwell on my loss, I am going to revenge trade. So what do? I get into my trade, I put a stop loss, I put a take profit. The next time I come back is tomorrow. Whatever happens until tomorrow, tomorrow I will decide. Okay, tomorrow when I have a clear mind, if I lost a trade, tomorrow when I have a clear mind, I'll just be like, oh, okay, let me review where I went wrong. But trust me, if I was staring at the charts and I watch price hit my stop loss, I myself know that I am mentally not strong enough to not revenge trade. Therefore, the solution that I have found for myself, the solution that I have found for myself is to actually just not look at the trade and not look at the charts until the trade is over. Until it's over and I have time to like calm down, and then it's a new day and then I have a clear mind to decide. Okay, so sorry, I'm asking, I didn't hear what you prefer to trade. I prefer to trade XAU USD. I prefer to trade XAU USD because that's where I've seen the most results, but that's just my own trading experience. I have a friend who is a very good trader as well. Okay, she's a very good trader as well, and she trades GBP USD and EUR USD. Okay, so different pair will work the best for different traders and different trading style. Okay, so it just depends on you what pair you want. For me, I personally like to trade XAU USD because XAU USD, I've seen a lot of results on it. And if I've seen a lot of results on it, it just means that my strategy, whatever I am doing in trading, is working on XAU USD. Okay, so my friend trades GBP USD. That means whatever strategy that she's using and whatever style of trading that she's doing is working on GBP USD. So stick to a chart that works to your strategy, or tweak your strategy to work to a chart. AUD USD, I don't really trade Forex. Can you share your trading strategy? So today's webinar is about trading psychology. We're going to stick to that. Usually on the live analysis session, that's where we share our trading strategy. So my live analysis session with you guys is next Wednesday. If I'm not, wait, sorry, it's not next Wednesday. Let me check my schedule. Let me check my schedule, guys. Just give me 1 minute. And I am taking you guys for a live analysis session this month. I just don't know what date it is. Okay, on the 10th of April, which is next week, I will be taking you guys for a live analysis session. Okay, so 10th should be, I'm assuming 10th is on a Monday, right? Usually Monday, so that means next Monday I'm taking you guys. Yay. Yeah, because I always do topical with you guys, but I haven't really done live analysis session with you guys in a long time, right? And I really like doing live analysis session because that's where I find my own traits as well. So I will see you guys next Monday for the live analysis session. Okay, so the solution to not revenge trading is to really just calm down and walk away. Okay, we love you when you're doing your live analysis session. Okay, thank you so much. Oh, by the way, guys, because I am going on maternity in 2 to 3 months means I will be stepping away from these webinars. So a lot of you have been adding me on Telegram because I eventually do plan to create a Telegram group chat for like trading and stuff. So you guys can add me there if you want. But if you talk to me now, I'm not going to reply you, okay? Because I still have a lot of stuff on my plate. When my baby comes, I'm going to step away from helping my husband with the businesses. I'm going to step away from a lot of things. So I'm going to have a lot of time just looking at the charts because I'll just be at home with my computer. There's nothing else I can do other than taking care of my baby and trading. Okay, so if you guys want to get in touch with me, this is my Telegram, SYNYIE. Okay, if you text me now, I'm warning you, okay, I might not reply. Okay, there is a very high chance I'm not going to reply because I'm still dealing with a lot of stuff. I'm preparing for my baby. But once my baby is here, I will focus a lot more on trading. And then that's where I can imagine I'll be quite active on that Telegram chat. Okay, so that's only going to be like in July or August. But if you guys want to add me now, you can add me now. Yeah, so you can just find me. I think you have to put an @ right in front. This is my username, SYNYIE. Good, I've been waiting for your Telegram group chat. Yes, I keep saying I want to do it, but just not this period. This period is crazy, man. I'm literally doing this webinar in my office right now. And I think some of you saw my husband walking around behind me. He was preparing some stuff for our customers and whatnot. So I am very busy during this period. Just give me a few months to settle down and then I'll focus more on like trading and helping you guys in like trading as well. Okay, so next one is overtrading. Okay, overtrading, you gotta take trades that make money, not for the sake of taking a trade. Okay, I'll look after your baby. What about making a Telegram group for us so we can get in touch and wait for you? Yeah, okay. So if you're already gonna add me on Telegram now, I'm just gonna add you in the group chat. You guys can just talk amongst yourself or something, but I won't be very active until like in a few months. Okay, so that's that. So please do not overtrade. I put a photo of a gambling photo here, and I put like investment photo here because the difference with overtrading and like only taking high probability trade is one is gambling and one is not gambling. So when I started trading, I had a lot. I'm sure it's the same for you guys as well, right? I'm sure it's the same for you guys as well. I'm sure you have heard people around you said that trading is gambling. How many of you have heard this before? Oh, I don't want to go into trading because it's like gambling. Oh, I know a guy who like lost his whole house. I know this guy, like, isn't that like gambling? Isn't that like going to the casino? Like, honestly, I've heard this so many times from like people who don't trade. Okay, so what is the key difference from gambling and trading? The key difference is that trading, right, is calculated risk. Okay, trading is calculated risk. Look, I myself have been to a casino. I'm sure a lot of you have been to a casino before. You know that in a casino, there is no way, zero ways that you can calculate your risk of winning. Okay, so actually people have calculated, if you play blackjack, your chances of winning to the casino is actually 48%. If you play roulette, for example, your chances of winning is also 48%. If you play slots machine, I think your chances of winning is only like less than 10%. If you play something, okay, so the difference with investment and trading or investment and gambling is calculated risk. How do you calculate your risk? Again, you use technical analysis, you use fundamental analysis, you use all the analysis available to you. If everything is pointing up to you, that means slot machine pre-programmed. Exactly. Exactly. Actually, slot machines are pre-programmed, if I'm not mistaken. Okay, so um, it's calculated, whereas you can use technical analysis to narrow down your chances of winning the trade. If you have a very high chance of winning the trade, take the trade. If you don't have a high chance of winning the trade, don't take the trade. But the problem is, because a lot of us here have very weak trading psychology and very weak willpower, even though it's a low probability trade, some of you will still get into the trade, right? And that's okay because I used to be like that as well. Even though I know the trade was gonna lose, I still jump into the trade hoping that it's gonna win. Okay, so please don't gamble. Please calculate your risk. Okay, ignoring fundamentals. As you guys know, I am not a fundamental trader. So the meaning of fundamental analysis is a method of determining the intrinsic value of a company's security to benefit from its trading, its macroeconomic factor, and this microeconomic factors as well. So the economy, the industry, the market share, things that you need to take in consideration, management, business policies, and earnings. And then that will go into intrinsic value of a company's stocks and stock selection, whether it's undervalued or overvalued. So if the intrinsic value is higher than the market price, you buy. If the intrinsic value is lower than the market price, you sell or you retain from buying. Okay, so this is why I don't do fundamental analysis. There's just so many things to consider. You need to know company data, you need to know company profits, and you need to know company economics and profit sharing and like market shares and whatnot. Okay, there's a lot of things and business policies and earnings and whatnot. Okay, so I feel like there's so much work into this. Whereas like technical analysis, technical analysis can be like a 10 minutes thing. So you say you manually calculate. Okay, because I only trade XAUUSD, right? So Desiree is saying that because I manually calculate my lot sizes and not use a website, that there's an easy way to do it. Okay, because I only trade XAUUSD, so I can do it like even without writing it down nowadays or using a calculator. I can do a mental calculation on it. So for XAU, it's the same for anything you trade. So basically, you need to know where your stop loss is. Whenever you are counting lot size, you first need to know where your stop loss is, because you're going to take your stop loss, the pips divided by, sorry, let me calculate. Okay, you first need to take your account size. So let's say you have $100,000 account, then you need to decide how much you're willing to lose. So let's say you're only willing to lose $1,000. So you know that you're only allowed to lose 1% of the $100,000. So you know the maximum loss is $1,000. You now need to determine where your stop loss is. That's why you cannot move your stop loss. You can move your stop loss to entry. Your stop loss can only get tighter, but your stop loss cannot get wider. Because if your stop loss gets wider, means your risk becomes wider. Please someone help me how to get Cassandra on Telegram, because I'm kind of stuck. I think you just go to like add friends and then you just type in my username. So my username is SYNYIE, and then you can just add me. Okay, so then you take the $1,000 divided by the pips, or like the points, okay, and then you will get your lot size. Okay, so but the problem is with Forex, right? Different pairs have different ways of calculating pips. So that's why with gold, I already know like I already know like one look, I already know like if I put my lot size at 2.5, I know that how much pips I can afford to move before I lose the 1%. Okay, so get your calculations correct a lot size. If you have a heart problem, there are programs out there that you can use to make your life easier. I don't use them because I'm stubborn, right? And because my mental calculation and my manual calculations have been working for me. Yeah, Des calls me all the time because he walks out of his office and he sees me like calculating my lot size on a piece of paper with a pencil, and he's like, "What are you doing? You know that we have programs for this nowadays, right?" I'm just like, I like calculating with pen and paper. Just leave me be. Okay, so just leave me be. So not keeping a trading journal. Trading journal will definitely help you guys in trading. For those who don't have a trading journal, honestly, you can just use Excel. Okay, so put a date. Okay, use a date, use a symbol. Okay, this is just something I pluck off of Google. Okay, put XAUUSD, GBP USD, whatever USD it is that you traded or non-USD pair that you traded, whether you went long or short, your lot size, your entry price, your exit price, and your profit price. Okay, your stop, basically your entry, stop loss, and take profit. And then you key it in, and then once you're done, okay, this one is wrong. Okay, this is not how I do it. After that, I have like a remarks. After the end of the day where I hit my stop loss, my take profit, then I will write a note, okay, it hit my stop loss. Why did it hit my stop loss? Then I go and review my trade, or it hit my take profit. Why did I review? Why did it hit my take profit? Oh, okay, because everything was pointing up and I got in for a buy. If it hit my stop loss, then I go back and review and it's like, oh, okay, although everything was pointing up, but actually there was a bearish diversion. So even though I buy, there was a bearish diversion showing me that it was a sell. Okay, so if you do this enough times, okay, if you review your trades enough times, you are going to make lesser and lesser and lesser mistakes. Okay, you are going to make lesser and lesser mistakes. Sometimes when I just started like my trading journal, one of my remark was that, oh, I lost this trade because I over leverage and I have no choice but to close it. If not, I will be losing too much. Okay, so when you write such a silly remark and next time you review your remark, you are going to get better and better in trading because you're going to be like, oh my god, what a silly mistake. Why am I doing such silly mistakes? And then next time you're going to make lesser and lesser mistakes and your trading is going to improve. Okay, so work on your trading psychology. That's all I have for you guys today. I will catch you guys again next Monday. Best friend, I will catch you on Wednesday for the Bahasa webinar. Please work on your trading advice. Trust me, if you cannot work on your trading advice, you're not going to be profitable in trading. I don't care how good you think you are in fundamental analysis or technical analysis. If your trading advice doesn't help you follow your trading plan, you are not going to make it, because if your stop loss is there and you don't follow your stop loss, you might risk losing your entire account. Okay, so please work on strengthening your mental strength. Don't worry, it's the same for everything in life. There's sometimes, like, it doesn't even have to be trading. You know, for me, I have a big problem with ice cream. For some reason, especially now that I'm pregnant, I can't say no to ice cream. Every time I see ice cream, I just have to eat it. And all of this is just like strengthening your mental like ability to say no, right? So if you can say no, I always tell myself, if I can say no to ice cream, I can say no to like overtrading. Exactly. So you need to say no and you need to work away from that. Can I specialize on EUR, USD, GBP, USD? Yes, you can specialize in all of that because it would actually complement your trading as well. So Bill that is asking if he can specialize in EUR, USD, GBP, USD, USD, JPY, AUD, USD, and Go. Okay, so one thing I noticed, if you do specialize in all of these pairs, it's good because they are all USD pairs. Number one. Number two, EUR, USD, and GBP, USD is very correlated. So if you do specialize in EUR, GBP, EUR, USD, usually you are also good at GBP, USD because they are very correlated pairs. Okay, so come to Perth, we have fantastic ice cream. Yes, I used to live in Perth. I used to live in Perth, so yes, I do miss it a lot. Okay, so thanks guys. I will see you guys again on Monday. Have a productive week ahead, and I hope you make profit in trading. For those who added me in Telegram, please know that I'm not going to reply there's a very high chance I'm not going to reply you, but I can add all of you in a group chat where you guys can talk to each other. Okay, I'll talk to you guys in a few months. Okay, bye. Bye, guys.